of years now, I think.
Awesome.
I met him on I met Joe on Clubhouse, and he runs the Creative BRRRR Strategies House, which used to be a club and is now sounds like it's becoming something else as Clubhouse restructures, but runs a great room on the weekends that covers really all things real estate investing. It's not just BRRRR strategy, although it comes back to that as example many times, but cover everything from lending to vetting, your power team to, gosh, just strategies and structures to really maximize what investors are doing. So I have learned a lot from Joe and the Creative BRRRR Strategies house, and so appreciate him. He has transitioned into a new position recently with BRRRR. Is it BRRRR Investing, BRRRR Lending? I know that it has BRRRR in the
BrrrrLoans.
name. BRRRR
Mm-hmm.
Loans, and does great creative structure loans for investors really all over. And so has that to offer also, and has a long history in finance, banking, lending, etc., etc. So just a wealth of knowledge. So I will turn
Awesome.
it over to Joe.
Thank you, Joe.
Thanks, Joe.
So thank you for allowing me to come on to the Zoom call here. My name is Joe Scorese, National Sales Director at BrrrRLoans. I'm celebrating my 24th year in lending, 35th year as a licensed realtor, 32 years as a real estate owner and investor of a real estate portfolio, second generation owner. Um, I did have a lot of single family through four families, sold those off and did a little owner financing with a package of about 200 doors. Currently maintain 97 doors, but strictly 5 through 25 units, a couple 5 units, a couple 25 unit, a couple 14 units, a couple 12 units. Also a 10 unit here where my office is in Philadelphia. Enjoy what I do. More recent prior to BrrrRLoans, I worked for a division of Blackstone Capital. I just recently opened up my own hard money line. I try to keep that money around within an hour where I drive. My direct private lending lines are nationwide in all 50 states. So as long as it's in the US, I could do a loan on it as long as it makes sense. I provide 30-year fixed money, whether refinance or purchase, up to 80% loan to value, depending on credit score above 660. And as long as the debt service is 1.0 or better. Now, again, LTV and rate fluctuates based on circumstance of credit and the asset and the income production of the property. Because I don't look at tax returns, pay stubs, W-2s, none of that stuff. I look at bank statements and the income and expense of the property, the credit score of the borrower, and their experience. I also look at fix and flip and or fix to rent, meaning BRRRR strategy. Either option, I go up to 90% loan to cost on purchase, 100% on construction. Rates start at 9.75 with a couple points. Again, it's based on experience in the past 24 to 36 months in rehab, investment properties owned, and credit score above 660. And we go up to 75% loan to value based on after repair value, not suggesting that in a declining market. But, again, if it's a good deal and you're going to hold it long term, maybe it makes sense to leave a little money into the deal, but we'll have more of a discussion about that when you present an opportunity to me. We are big on value add on multifamily, 5+ units, typically up to 25 units is our sweet spot. If it's bigger than 25 units, obviously we have options, but it's a different type of discussion, and you definitely have to have a higher level of experience and credit and reserves. We look at mixed use, meaning a combination of residential and commercial. We prefer residential to be at least 51% or better than the commercial space. Not that we don't trust commercial right now in office retail, but we don't, just because of the economics, inflation, recessionary environment. We'll look at blanket loans where we blanket multiple properties. We'd like to see a value of at least 100,000 per property and a loan amount of at least 75,000. On the blanket loan, I want to see a loan amount of at least $500,000 or 5 properties. So the property is going to need to be at least worth $150 a piece to make sense of it, or it doesn't make sense to do a blanket. Will make more sense to do individual. Going back to my fix and flip or fix to hold, We need a combination of $100,000 of purchase and rehab. We do welcome newer investors, meaning a newbie, but we do not suggest or will not recommend more than 45% repair costs based on the purchase price. So if somebody's buying something for 100,000, the repair should stay under 45,000 on a newer investor. We are very firm on debt service coverage ratio. I provide worksheets for investors to review and strategize with me, as well as a maximum allowable offer worksheet, cash flow worksheet, as well as a rehab construction template with a draw schedule. We do look at short-term rentals, but again, they do need a trailing 12 for me to verify air DNA. Otherwise, I go back to market rents and extrapolate that times 25% to come up with my allowed leverage on that asset. So I have longer discussions with clients, longer strategy discussions. It's not kind of a wham bam, hey, how are you? I try to build a relationship with an investor so they better understand their strategy and options. I also provide unsecured business lines of credit for LLCs, as long as you have a 700 credit score or better. Any questions so far before we go any further?
Quick question on those LLCs. What all are you looking for? You know, 700 or better credit score. What else are you looking for in those LLC loans?
I mean, it could be new, then we fall a little more on your credit report. If has some longevity, let's see what the solid returns look like. I can get you qualified up to $150,000 with limited documentation. It takes about 30 to 45 days, but it does work. I just got somebody approved for almost $200,000 because they were perfect for the program. Okay, so everybody's a little different, but if you don't have a 700 score or better, it's not even worth getting to the starting line. What I could do instead for you to stay proficient with it is become a referral partner. So if you want to become a referral partner to sign up others and get yourself better educated, understanding the program, we can set you up as a referral partner as well. And I also offer referral programs in the lending side on any of the programs. I pay out a referral. It could be on the HUD, it could be off the HUD, however you want to do it. As long as you make the proper email introduction to the client, I track it, you get paid. I can set up as an origination or a flat fee, depending on how much work you want to put into it. I also have a referral program for title services. I own a title company. It's national with Stewart Abstract. It's called Abstract National. And I can pay out a referral fee on that as well. If anybody's interested in that, please let me know. Kelby, you have your hand raised?
Yeah, absolutely. Can you hear me okay?
Yep, perfectly.
On your LLCs, are you guys underwriting those and financing those in-house, or are you using third-party like SBA lending as well?
LLC refinancing and purchasing for non-owner occupied investment properties have nothing to do with SBA. I'm a commercial lender. Everything's done in-house. We're a direct private lender. We close in our name.
Thank you.
Thank you. Chris, any other questions?
No, the referral I'm interested in as well. So anyway, as we go, I'm sure you're going to answer a lot of my questions. So,
sure. Levi, you have any questions? Do you have any questions? I can't hear you. I'm mute.
Sorry, I said not at the moment. Keep going, and I might have some more.
Sure. So, a lot of the first questions that typically people call and ask, right? What's the rate? What's the rate? What's the rate? So some of you look like you're of my age or close to or not. So a lot of you are just depending on what people have told you, what's happened in other real estate cycles. But the average rate in the market over the last 40 years has been 7% or better. The problem you have here is you have an inflated real estate market with very limited inventory. So over the next 12 to 24 months, and I'm probably looking at more of an end of first quarter, beginning of second quarter, we're going to be in a buyer's market as REOs, foreclosures, the zombie market starts moving into the market, as well as surrendering of commercial real estate and or conversion of commercial real estate into residential rentals, and they flood the market with rentals. So, every commercial building that converts into a residential building or a hotel, you're now bringing anywhere between 30 to 100 to 200 rental units to the market. So what does that do to your rental market in your urban cities throughout the country? It drops. What happens to the values of the SFR through 4-family properties if rents drop? Values drop. People get a little more concerned. You start seeing more properties going up for sale. Then suddenly you're in a buyer's market. So we'll be in a, I think, based on rates, they're not coming lower. They're only going to go higher over the next 12 to 24 months because we need to control inflation. And none of us have any control of inflation. The only the only entity that creates inflation is government. So until we have a government reset as well, we're going to see inflation not come down. And Fed Powell is having a hard time keeping things under control. It's a very leaky ship. So you have to buy smarter. You don't have to be desperate. You need to get your credit in check, your liquid reserves in check, and be prepared for opportunities. Because when there's chaos, and we're in chaos, it's only the beginning part of the chaos. There's opportunity. So this is a time where myself, I'm a lot busier because I actually love chaos. As a commercial lender, we love chaos because there's more engaged real estate professionals, and kind of the fake it till you make it type of mentality disappears. So this is the time to get yourself better educated, to better understand your market, better understand your numbers. If you're going to pick a market, burrow a hole into that market, understand those neighborhoods, understand the zoning, understand who's the zoning, who's the winners, who the losers are. Because if you find out who's winning and losing, you still win with either one. You need to sharpen your tools with your power team. If you're the smartest person in your power team, get a new power team. I like hanging out with people smarter than me. I don't like hanging out with people that depend on me for my smarts. I already went down that road once, and that doesn't work for me too well. I am a stroke survivor, so I look at life a little differently. Breathing is not overrated. So I take a very holistic approach to my life and who I surround myself with. So I'm very concerning of my power team, and I'm very concerning of education, information, and kind of providing a holistic way of understanding real estate. So the worksheets that I provide and assist real estate professionals with, I have no problem getting on a one-on-one and doing a share screen and running scenarios with you, whether it's debt service coverage ratio, Mayo, cash flow. I can actually share a screen and kind of grab a couple for you to take a look at. So hang on one second. Let's see here. I use this debt service coverage ratio intimately. So let me see if I can share the screen. Oh, I can't share screen. Can you give me accessibility, Chris, to share screen?
You bet. Yes.
I won't show any compromising pictures of Jill, I promise. If she's paying attention.
Joe, I'm always paying attention.
I just making sure. Just making sure. Yeah. I don't get always the opportunity to pick on Jill, so it's a lot of fun. So, does everybody see that screen? Does everybody see that? Okay. So we're just going to walk through an example. Okay. So we're going to see a 2-unit. Let's use 2,000 square feet. Again, it's just numbers. Okay. Value is 200,000. We're going to do 75% loan to value. We're going to use 8% as a bad rate. It's not a bad rate because it's a realistic rate. Okay. If you're not using that number right now, you're not using a real number to figure out your back end on a fix and flip or fix to rent. We're going to go 75%. We can go 80, but the rates are even worse. Okay. So let's say 2,000 a month is the rent times 12. So that's 24,000. Okay. We take out 5% of vacancy off the collection of the rent per year. Management fee, if you're self-managing, another 5%. If it's not self-managed, you change that to 10%. Everybody understand? You then obviously have repairs, so you're going to take another 5% off rent because things will break. All right. Taxes, this is used $2,000. And it's used insurance $1,500. Wow, look, debt service is 1.25. Winner, winner, chicken dinner. Not bad, right? You should be able to pencil down and send me a debt service on property A, B, C, D to Z with this information, understanding debt service of the property. Instead of me guessing, boom, 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 you could send this over. Now you're sending me a grenade over the fence with a pin in it, okay? Any questions on this so far? Good? Okay.
Yep.
I'm going to share another screen. How do we get to debt service if we're talking about the BRRRR strategy, right?
All right.
How do we do that? Can everybody see the Mayo worksheet? Can everybody see Mayo?
Mhm.
Somebody on mic can tell me if they see the Mayo worksheet.
Yeah, this is the one we were just on.
Can you see it?
No.
Okay, hold on.
Not the new one. Yeah.
Okay, hold on. I'll close this out. Okay, I'm gonna share. Now we can see it, right? So the perfect Mayo for BRRRR strategy is 65% loan to value based on the after repair value. This sheet determines that. You have your after repair value or your CMA, you back off 30%, here's your costs, you back off your repairs. Then that's your Mayo. You take another 15% off for negotiation room, that's your starting Mayo. If you obtain a property with somewhere between starting Mayo and Mayo, you're already 5% ahead of what a lender allows you to go up to. Remember I said I could go up to 70% loan to value or even 75%? What if you're coming in at 65% loan to value based on after repair value? Are you looking like a smarter, more precise real estate professional? Think
Yes.
about that. This is a very simple worksheet. So if somebody fills this out and sends me over the Mayo sheet and the debt service, do you think I understand what they're trying to accomplish on a BRRRR or a flip? So let's look at another worksheet. Okay. Where'd it go? Cash flow worksheets. Can everybody see that?
Yeah.
So we carried over the after repair value that you came up with. Now this is what we call and figure out what your cash on cash return is, right? Do you see some of the relevant expenses from the debt service coverage ratio worksheet? To my right? You see that we can go up to 75 to 80% on a refinance. You better understand and know what your market rent or rents are. You come up with your expenses and then your monthly debt service. Everybody should save on their computer simple mortgage calculator. Because if you put 8% on a loan amount and a 30-year amortization, that should give you the principal and interest or the monthly debt service of that loan. So everybody should save on their computer simple mortgage calculator. It comes right up on Google, and you can pop in the loan amount 150, 30-year amortization, 8%, and you can pop the principal and interest in that spot. Fair? You could then figure out what your expenses are, your rent, and really find out up and above the debt service, even though with debt service is at 1.25, if we remember, what is the cash on cash return of that property once you refinance? Does it make sense? If you're only going to make a couple $100 a month and get no money back on the refinance on the BRRRR, maybe it doesn't make a lot of sense. But if you're making like $800 a month and you do that 10 times over and you get 20 grand back every time you do a refinance, who's the smartest person in the room?
Yep.
Make sense? I'm going to slow down a minute. Anybody have questions on the Mayo sheet or the cash flow worksheet? No? Okay. So I'm going to show you one more worksheet, and I hope this helps. Okay. Has anybody ever seen this before? This screen. It's a rehab construction budget along with a draw schedule. Does everybody have a handy copy of this for yourself when you're walking through a property for rehab? Now you could add and subtract a lot of these line items, but I think it's really important to have this. And what I would add into miscellaneous, there's two things: home inspection and staging. You want to hire a home inspector on the way in with a GC, and you want to hire a home inspector on the way out to inspect the GC on the last draw. That's an extra $900 in the budget. And staging, you got to throw $1,000 in there. And I would add a 10% contingency at least to whatever your repair cost numbers come up with. I provide this to anybody that's interested, of course, and I can walk through this. And once I see these 4 sheets, I can figure out if it's going to be a good fix to flip, a good fix to rent, a good 30-year amortized. And I could pretty much use that debt service and Mayo worksheet and cash flow worksheet for 1 unit or 25 units. It doesn't matter.
Okay.
Make sense?
Yeah.
I'm going to show you one other spreadsheet that I think is important. I don't bring it up enough, but I think it's important to bring up. Let me find it. It's called a data tape. Give me 1 second. This is what a data tape looks like. To me and you, most likely, it's a schedule of real estate owned. So you want to tell me this grand story about your portfolio, right? Everybody wants to tell you the story. I want to see very specific information on the properties you own. Address, city, state, zip code. How many units is it? Is it a condo or not? What's the monthly rent? What's the annual taxes? What's the annual insurance? Is there an HOA? What was the acquisition date? Acquisition price? Renovation costs? Hang on, I lost myself here. So if I take the acquisition price and the renovation cost, that's my total cost basis. Then I want to know if you owe anything. What do you think the value is? Is it leased? Is it Section 8 or market rent? These are some basic questions that you should be able to ask yourself and answer for any lender that you're working with. Hold on, did I lose everybody? There we go.
No, for a second, yeah, well, we're good.
Yeah, sorry about that. I'm good now. So the data tape is extremely helpful, and I can provide this copy as well. I think this is really important to have because you're trying to explain a story to somebody, whether it's me or anybody else. And sometimes it's just hard to explain, but if you send something over in writing, you know, people are very visual nowadays, right? Now you're preparing them for the conversation. Do you think the conversation is more strategic when you provide this information to somebody instead of just calling them randomly and asking for rate and term? So it's being the educated borrower and being the educated real estate professional is going to be the individual that conquers chaos during this market fluctuation and volatility. So if there's any questions at this point, but I try to keep it short, brief, to the point. not overdose. I do also provide educational subjects every Saturday morning, 8 a.m. Eastern Standard Time, and every Sunday morning, 9:30 a.m. Eastern Standard Time in the Creative BrrRR Strategies house on Clubhouse.
Nice.
How did it do, Chris?
Good, good. I'm sure we're gonna have some questions. I know I'll have one or two.
Let's stop the share. So anyway, it was 30 minutes of just kind of a little overview, and I think it's enough for people to absorb.
Yeah,
I'd love everybody to email me, and I can provide you information on the unsecured business lines of credit, information on these products, the spreadsheets that I provided to you, just went over with you. And if you want to have a one-on-one on a scenario, then I could show you how I write up a deal to get terms. So like a broker just called me about a 9-unit value up. We went through the whole thing, right? I sent him what I wrote up. It's like, wow, that's all you needed? I'm like, yeah. I said, if you put this together just like this, I'll have your terms within 24 hours. It's as easy as that, okay? But you got to be very bullet point oriented. So if you, no matter who you want to work with, you want to make it easier for them to give you terms quicker. Time kills deals. We're in a much more rushed, expediting type of market now. Especially with the direct private lending. Rehabs take 15 to 20 days to close. Refinance and purchases take 30. Boom. I'm supposed to get terms for you the same day. Appraisal ordered. Boom, we're closing the deal. You know what I mean? That's how it works in our industry now. It's not like a residential, bank where it's like a big iceberg and it's slow and it's calculated. It's going to close within 45 to 60 days. No, you come to an asset-based lender for speed, expedition, and limited documentation. So I hope that helps.
yes.
I do provide a full-blown workshop on this. Typically, it's like I can bang it out in an hour or so. If you ever want to schedule something, we could figure something out maybe over the next 6 months to come in, or do a Saturday workshop or something where it's a little more orchestrated. We can provide breakfast or something like that, or lunch, do like a 10 to 12 or something. Starve them till 12, and then we do a little masterminding afterwards. We'll pay for the lunch, and as long as there's 10 to 15 people, it'll be a very fulfilling 2-hour workshop.
Nice.
And please connect with me. I know, Chris, you're connected with me. Levy, I don't know if you're connected with me, but I post education, information, and motivation every morning. 3 posts go up a day.
Yeah.
7 days a week. Okay. I'm here to provide hopefully insight and follow up and follow through in communication. So if I could be of any assistance at any given time. And then the referral partnership, I could send you some information on that as well.
Awesome. Anyone have any questions? What questions do you have?
Hello, this is Brandon Rogers. I have just been recently working to try and get a DSCR loan refinance on one of my 4-unit properties in Joplin. And what I'm finding is that a lot of the national companies have $100,000 minimums or even $50,000 minimums. And I thought I heard you mention something about that when you're going through your initial review. In Joplin.
So what's the value of the property?
Well, that's a good question. I haven't had it appraised. What I've got off of realtor.com is anywhere between 118,000 and 160,000.
I'd say hypothetically, it's worth 135,000. We could refinance up to 75% on that property.
Right, which is below. So that's
Our minimum
below
loan
the
size is 75 grand.
minimum.
Our minimum loan size is 75,000. Minimum value has to be 100.
Okay. On a fix and flip, or not a fix and flip, but on a fixed to rent, we have a lot of properties between the $20,000 to $40,000 purchase price in the Joplin metro area, with probably a construction budget around 30 to 45,000.
That's the unsecured business line of credit program, up to 150,000.
Okay.
There's really not a lot of other takers until you get the property stabilized and get that value above 100. So the unsecured business line of credit, you could buy something for 20, renovate it for 30, come back to me when it's worth 100, and then we refinance it at 75,000 after 3 to 6 months. That's how
Okay.
you do it.
Because I've got a property on subject to right now, and I'm financing the whole thing with my own capital. And I was looking to refinance my rental to
What's the loan amount?
on
The subject
my
to?
subject to 39,000.
Too small. I can only give you the unsecured business line of credit, throw it on there and pay it down with your cash on cash return. And you got to weigh out the cost benefit on that.
Right. Okay.
Small. I mean, I might have an option, but it's like a 25-year AM. You got to own it at least 12 months. With a 5-year arm, it's probably 10% on the rate. But a $35,000 loan amount, 10%, you might be making a lot of money still. You know what I mean?
Right.
It's done in the LLC. The LTV is no more than 65%. So it might work. I'd have to see the scenario and pass it by one of my underwriters. Everything is case by case. You see it like when I'm hearing the conversation, I'm pivoting to this, I'm pivoting to that. Everything has a box or it's a quick no in some situations. I wish I was more confident in my youth where I said I said the word no more often. I'd probably be I would have been in a better dating situation growing up. So I'm very direct and I don't really skirt much because I don't want to waste your time either. I don't want to take you down the football field and you find out you get to the 20 and nobody has a football in their hand. That's unfair to you, Brandon. You know what I mean?
Right. I agree. Yeah.
Yeah, so if you want to fill out the data tape and let me see what you have going, then we can have a little more strategy discussion. Do you own properties or just 2 properties?
Currently just these 2 investment properties. So
Fill out the data tape. Send me the data tape back. I call you. We go over just to make sure I get my head wrapped around it. I'll give you the best suggestions I can give, and it doesn't cost you anything.
you bet. Yeah.
Okay, and my information is in the chat.
Yeah. I got it.
Excellent.
I'll send you an email.
Excellent. I look forward to it.
Yeah. Appreciate it.
Any other questions?
On your fixer loans, what kind of term length are you looking at? Is it 12 months or?
I'm 12 months. I mean, I
12
can give you an
months? Okay.
extension if you need it. Yeah, 12 months is typical. You don't want to be in it that long anyway.
No.
If I do the rehab loan, I don't even have a seasoning option on the back end. I can refinance it right away.
Okay.
As long as it's leased. As long as that lease is signed in place, it's got to be leased to a real person, not an LLC. But yeah.
Okay.
Anna, you've been very quiet down below. Any questions? Anna going once. Anna going twice. Jill, any questions
She says no.
from the pool side?
I can't think of anything, Joe. That was a lot of great stuff. And I
Yeah.
know that, I use your sheets and I have those and they're great. Those are a great asset to you. So just appreciate you always adding value to things.
No problem. Yeah, I added the data tape. If you don't have that, just email me, okay?
Awesome.
Yep, I will.
Thanks. Levy or Chris, do you have any questions?
I don't. If
I don't,
anybody else?
no.
Yep.
All right. Well, I look forward to getting everybody's
Thank-
information. Let's get you all set up as referral partners. I have no problem giving people money. I love paying people off. I really do. Because you know what? I'm in the non-QM space. I'm allowed to give referral fees. I'm not restricted and regulated under Fannie Freddie guidelines. It's given me so much freedom to really be a referral partner for everybody. So if I can help out in any way, whether it's the RIA making money or you guys making money, creating extra streams of income, I'm all about it. So I really appreciate this time. And let's stay in touch. And guys, come up on the clubhouse. If you're in the room listening, text me, let me know, and I'll invite you up and you come up and do a little overview of who you are, what you do, and no hard selling. That's all I ask.
All right. Okay.
Perfect.
Well, thank you, Joe. We appreciate your time today.
All right, guys and gals. Everybody have a blessed Labor Day weekend, and then we'll talk soon again, all right?
Sounds
You
good.
as well. Thank you.
Yeah, thanks, Joe.
Bye, Joe.
Take care, guys.